Analysts at Cordros say they expect mixed to positive sentiment in Nigeria's equities market, supported by the upcoming release of more Tier 1 banks' earnings and dividend declarations. Ope Oluwa, Research Analyst at Cordros, joins me for market updates. Ope, thank you so much. Pleasure to have you on the show today.
Thank you for having me.
It's a four-day trading week for the market. The market has had the chance today to digest the latest inflation data for the month of August, so printing lower at 32.1% from over 33% the previous month. Perhaps let's start there. Any market movement, how investors, this obviously it's positive news, although on the streets and in the shops, in the markets, the feeling on the ground is a little different. But is this having any impact on the market?
Well, I think the first thing to understand right now is the cautious cloud that's in the equities market right now. We have investors who are, pretty much not making as much moves as we'd normally see in the market, and this is as the high interest rate environment, which has ensured or allowed yields to trend to quite high levels, have continued to limit the level of investment that we've come to see in the equities market over the last 4 or 5 years.
Okay, fourth? I was going to ask you what period.
Yeah, so speaking generally, we also saw that in January also. Right. So we're in a situation now where, most people, in fact, investors are pretty much, risk off in terms of their sentiment, expectations on the market. And as such, the sort of, performance that you would have seen in the market due to inflation trickling downwards, especially on consumer goods names, sort of doesn't exist now because we have overarching macroeconomic issues that just keeps limiting this.
But the market has returned about 30%, correct me if I'm wrong, thereabout so far this year. Some might argue that that's not a bad return given, the economic circumstances that the country has found itself in. But there have been a few shining stars, if you will, in the market, some best performers this year. Talk to us about what has separated those category of stocks and players from the others.
Yes, I think to put some perspective to that, it's quite pertinent that we understand that most of the market moves happen in Q1, right? In January, February, pretty much before we started to see full year 2023 earnings, where we started to see the impact or full impact of the FX valuation on numbers of most of the top names in the market. And we've seen that the market has pretty much retained that positive performance from January. But we've also seen, like you said, some names pretty much have come out and outshined others. Specifically, in recent weeks we've seen, Owando do its all-time highs. Geregu itself also hit all-time high. I think it was even close limits up today. Even across the banks also, we've seen some movements also, which has contributed to this positive movement in the market. Speaking of the banks, we've seen GT touch 50 naira levels this year. We've seen Zenith also breach 45 naira levels.
Have those rises been helped by the rights issues, IPOs that these banks, or recapitalization efforts of these banks? Getting investors to think about, the future of these banks could potentially be brighter with, of course, more money at their disposal, etc.
Yeah, so those banks have had that sort of movement which has come out or has come outside of the rights issue.
Okay.
So the rights issue public offers by some of these banks have happened at discounts to market price, and some may say that those offers right now may have tethered level of increase that you would have expected from the banks in recent times, and possibly we should see even better movements, price moving upwards from these banks post the offers. Right.
Now you're expecting corporate actions to drive investors' interest in banking stocks and going forward. But talking about dividend yields generates, this year, in the earnings seasons we've had in the past quarters, how would you describe, in terms of a 2-year, 3-year trend? We know some names obviously are, setting new levels and all of that, but generally speaking.
Yeah, we've seen most of the key, strong dividend-paying stocks, have troubled years and as such not been able to pay dividends. Recent times, right? This is coming back of periods where we've seen quite, strong dividend yields for investors. So you cite names across the consumer goods space. You cite MTN, for instance, another name, which has not been able to pay dividend because of the issues around FX. But for the banks, they remain trailblazers. Like you mentioned, GT, Zenith, declaring interim dividend of 1 naira. This is 50% or 100% increase rather from last year's 50 kobo that was declared by both companies. I mean, both banks. So I mean, it's quite strong, and we expect that investors will be looking at these sort of numbers when with the expectation from UBA and Access by the time they eventually release their results.
Right. Now, I mean, for the rest of the year, we're not that far. For the rest of the week, for the next couple of weeks, what sectors, and let me ask you this, in terms of the sectors that you would classify as defensive sectors or safe haven, I mean, they still exist. I know, I mean, the banking sector is still the most liquid, still the most traded, but in terms of when investors say, look, I need to take shelter, I need to preserve more value, etc., what are those sectors?
I mean, still the banks. We've seen most investors, even now, still play or still park most of their funds and banking names. We have some other names who typically would have been defensive names, right? But the issue around FX continues to mar their earnings, and as such, we've seen that risk-off sentiment, and we've seen those stocks fall to, which I must say, quite favorable price points. But at the point where we start to see the effects of FX dissipate, we start seeing some other sectors, particularly some names around, the strong names in the consumer goods space, and even the telco names also.
And not even oil and gas with all that's happening, I mean, with some of the key players.
For oil and gas, Wando is pretty much a resurgent entity. I've seen that in recent times. Total, okay, for instance, Total is one name. I think it's about trended to 600-700 naira levels in recent times, just showing level of interest in that stock. So yeah, I mean, actually, oil and gas, some names in oil and gas.
Some names, hopefully, lifting the rest of the names. 10 seconds, outlook for the rest of the week.
I mean, risk of sentiment, cautious
profit
trading,
taken here and there.
Yeah, some bargain buying also.
All right. Ope, we'll leave it there. Thank you so much for talking to us today. Appreciate your time on the show. Ope Oluwa, Research Analyst at Cordros, taking us through trading at Nigeria's stock market